Hi and good afternoon, everyone. Those who are following us from Europe, either on social media or here in the room, that's already very late night. Same for our traders in Asia. I don't want to talk about those living in Australia. I don't know what's going on. Yeah. So the sound is good, I assume. So guys, welcome to our Advanced Day Trading Strategies course. The timing this month is perfect because this is a class that usually follows the Star Trader class. Actually, the prerequisite for this class is to take the Star Trader class. Now I know that being that it's open on social media, in the room, not all of you took the Star Trader class. Those who didn't, I strongly suggest that you do. Those who took it once, I suggest request the recordings or just, go to the Tradenet website and take it once again. It's super important to feel comfortable with those strategies. You need to sign up for the Star Trader class. It requires registration. Just check it with Clifton tomorrow morning. So, guys, welcome to the Advanced Day Trading Strategies. Like I said, it is a class designed for day traders, and it's built around the Star Trader class. Those who have some experience in trading, even those who have a lot of experience in trading, I hope you'll benefit from the content of this class. So, okay, let's start first with a question. What is the one most important or the most important parameter in trading or investing for an investor? If you are an investor, what are you looking for when you buy a position? You look for trend, volume, the VWAP, moving averages, daily range, RSI, Fibonacci, money flow, pivot points. What do you look for when you are an investor that trades basically on the daily chart and you're looking for a 5 to 20% move, let's say risking 3% or 5%? What is the one most important parameter in investing slash trading long term? And I'm talking about only one, okay? Only one. That's the most important. Anybody wants to take a guess? Shalev says trend. I say also trend. Anybody else? Daniel says low price. You mean a cheap entry, not necessarily a low price in terms of dollars. Anis says volume. Volume, cheap entry, volume. Okay. So basically, we have three ideas here: trend, volume, and a cheap entry. Basically, all of them are important. Okay, but let's talk about volume a little bit. If I am an investor that trades based on the daily chart, sometimes I don't even care about the volume. If I'm buying a small position, let's say 300 shares, and I'm sitting in the position 6 months or 8 months, the volume is not going to be very important to me. Most of the time, I won't even check on the volume. A cheap entry is important. Of course, the most important thing for an investor is the trend. It's very simple. You want to enter a position, okay, and assuming that it will pull back no more than your risk, the stock moves higher, and you check it on the daily basis, maybe on a weekly basis. You don't care about the volume intraday. You don't care about intraday patterns. You don't care about anything. You just want to see the stock moving higher. And this is, hold on a second, guys. I forgot something very important. Clifton is already reminding me. We need to record this session. All those sessions are being recorded. And the name of the session is going to be ADST class 1 out of 3. And the day today is October 18. Wow, that was this reminder from Clifton. So I just started the recording. I forgot also to mention that we go today, tomorrow, and Wednesday, 4:05 until 6:30, maybe 6:45, depends on how you're going to react to the class. Plenty of participation, no participation, and so forth. So let's go back to the question. If you are an investor, things are very, very simple. Assuming you did your homework and decided on the trade, all you do right now is nothing. Okay, basically you let the market, you let the flow of the market do the job for you. That's totally different from our job as day traders. So what are the positives in investing? First of all, you don't work very hard. You buy the position, assume the risk. Let's say you buy the entry at $10, you take the risk down to $9 or $8, that's 20%, and you expect to move to 15 to 20, that's 50 to 100%, and then you wait. Sometimes you will wait 3 weeks, sometimes 3 months, sometimes until you reach either the stop loss or the target, you may wait a long period of time. You can't trade long-term leveraged or on margin. No broker is going to let you trade overnight US stocks or basically any stocks on leverage. Okay, so you need to invest very, very carefully. You cannot use leverage, and you wait. Sometimes you will get great results, sometimes less. There isn't a lot of work involved in that. So to me, the most important parameter for investors is the trend. Okay, now let's move to our business, which is day trading. And now it gets more complicated because as a day trader, okay, you usually take bigger positions than your account. You use leverage. Now, let's say your account is $50,000 and the broker lets you leverage it 4 to 1 so you can use the $200,000 of buying power. You will use that leverage intraday. Also, you will buy positions that are bigger, okay, bigger than your actual account because you want to make money, you work for that money, and you want to get paid, let's say, $500 to $1,000 per day. So here comes the question. Which is the one important parameter for a day trader? What is the most important parameter for us? Derek says volume. Shulev says volume. Price, risk management. Other? So volume is the only parameter that is important to you. Shulev, why is volume so important? You said volume, but the daily, but I'm not talking about the daily right now. I'm talking about the intraday. You are a day trader now. The daily is important, but what is the most important thing when you look at the chart intraday that you want to see? Yeah, let's put it this way. We need stocks that move. First of all, that's the bottom line. We need stocks that move. That's super important. And we need stocks that have an intraday technical pattern. And we need stocks that have good risk reward. And we need stocks that have tight spreads. And we need stocks that have good volume. So we need a lot of stuff. And we need the market to be moving higher or lower, so it will be easier for us to trade. So you can see now that while in investing, it's relatively simple, the job of a day trader is way more complicated. In investing, it's 0 or 1, okay? In day trading, it's not 0 or 1 because you can be in a trade 20 cents, your risk is 30 cents, you don't take money off the market, you don't take profits off the table, and then the trade moves against you. Or the stock is moving up $1, and instead of letting it move $1, you took profits after 30 cents, and you left 70 cents on the table, which is also a big mistake. Actually, you lose more money when you leave 70 cents on the table out of a dollar move versus losing 20 cents on a batch trade. So again, the way to day trade, and Meir, I think, elaborated on that today, is to find your own system. Now, we will help you find your own system with guiding you towards the best trade ideas that are basically float every day in our trading room. But again, which is the most important parameter for a day trader? First of all, there are many, but I won't say moving average is an important parameter at all. Okay, Kaufman? You will see immediately what are the parameters that we use. Okay, and then you will decide if it fits your strategy or not. But nobody here in this room uses moving averages. Why? We will explain later in the class, not today. I think tomorrow or on the day after or Wednesday. Now take a look at this daily chart. Okay, it doesn't important what is the symbol of this stock. It can be Tesla. It can be ABB. This is the daily chart. Now you can see, if you analyze this daily chart, you'll see that the stock basically trades sideways for months, then moves up very fast and down very fast, and then trades sideways for months, and then moves up and down, and then moves higher and lower very, very fast. Now, it's clear that on those stocks, on those intraday bars where the stock is moving sideways on zero volume and zero daily range, it's virtually impossible to make money for a day trader. If you are an investor, okay, it's fine with you. You wait. You wait 4 months, and after 4 months, the stock triples or quadruples if you are in this event, okay? But if you are a day trader, you cannot trade most of the trading day or the trading days in a stock. You need to focus on that, on those special trading days where there is a definite increase in volume and increase in trading range. Now, if the trading range increases by 400% or 500%, and the volume increases by 300 or 400 or 400%, it means that most of the time, it will mean that institutional traders are diving into the stock, buying on whatever reason, probably good reason, like earnings, an upgrade, I don't know, great reviews, great news, great outlook, whatever. It doesn't matter what is the reason. It's a positive reason. And now, here comes our biggest advantage, okay? We don't need to buy a lot of shares at various entries to make a lot of money. We need to follow those intraday patterns and buy the breakout at 20 and sell it at 21, while the institutional trader will have to buy at 20, at 20.05, at 20.10. He's going to buy, and he's going to be the one moving the stock from 20 to 21. It's not going to be the day traders that's going to buy the range between 20 and 21. Most of the day traders and swing traders are going to buy the breakout or the reversal, and then the hard job is going to be on the institutional trader. Now, if many institutional traders are joining the trade, then we're going to get these, unique day where there's a huge increase in volume and a huge increase in range. And those are the trades or the timing of the trades that we want to use and take advantage of as day traders. Okay, so it's very simple. Trade those days where the volume and the trading range is way above average. Now, easier said than done, but where do you observe or let's put it this way, on what time frame you observe that the volume is way above average or the daily range is way above average? How you can observe that? Let's say FUTU is trading today at 10 a.m. 5 million shares, okay? And you look at the intraday chart, you look at the volume and the range, but how can you observe that FUTU is trading today 30 minutes into the trading day more volume that it traded Friday, only after 30 minutes? How can you observe that? Yeah, you just look for a split second on the daily chart. Now, if you look at split second on the daily chart today, okay, you can observe that the volume in FUTU picked up substantially over Friday and over, I don't know, looking back 2 months. And the daily range by 10 a.m. or 10:30 a.m. is already way bigger than it used to be last week or the last 2 weeks or the last 3 weeks. Obviously, something's going with FUTU. Again, the reference is not the intraday chart, the reference is the daily chart. But the daily chart is not telling you what is the entry point. It's just pointing you and saying, okay, something's cooking in FUTU today, find the entry on the intraday chart. And now, okay, as a day trader, your job is to find the entry on the intraday chart. Now, if you are an investor in FUTU and you bought it, let's say you bought it Friday, you're not even going to look at the intraday chart because that's not your job. Your job is to wait for the target, which is, let's say, I don't know, 80. And the risk is down to 50 or whatever. So you're not even not going to bother to look at the intraday chart. Nobody cares. As an investor, as a day trader, okay, it's totally different. You need to find that particular entry in FUTU. So now let's go back to our chart. So you can see that most of the trading days, and this is a very, I would say, representative chart. Most of the trading days on the daily chart are very boring. And it's possible that this stock that you're watching right now is actually Tesla. It's possible. I don't remember. But most of the trading days are untradable or very easy to trade. Okay? But it's the money-making trades or the money-making days are very, very few in between. And those money-making days are coming after some news, special opportunity, like I said, upgrade, anything that says to investors, especially institutional investors, dive in and start buying. Breakouts on the daily and so forth. So you can see here that while the stock is moving sideways for months, it's moving aggressively higher very, very fast. Those are the days or the timing for the day trader to come in. No, I don't want you to analyze oversold trends, okay? because oversold trends can continue also for weeks. Okay, I want you to enter once you get the signal from the daily chart that it's okay for you to enter. And the signal is a big pickup in volume and a big pickup in the trading range. This is the day where you need to trade the stock. Okay? Analyzing the daily is fine, but it won't give you the right opportunity because, as you can see, the move or the big move is happening very, very sporadically. It's not like every other day you have a chance to trade a stock with very good volume and very good trading ranges. Okay? It's actually happening on very, very special occasions. For example, FUTU today. For example, Alcoa, AA Friday. For example, WBA Thursday or Wednesday. I don't remember which. Okay, those are the those are the days or the specific or the great days to be trading the individual stock that has a huge uptick in volume and in trading range. Again, and then it's not enough. You need also to find the intraday entry for the stock. Now this is a chart of a stock. Again, it doesn't matter. This is now the intraday chart. And you can see that the stock here, let's call it AAA, starts to trade in the morning at 17, trades as high as 23, and closes the trading day at 22. So this is a $17 stock that trades down to 16, up to 23, down to 20, closes at 22. This is a very, very specific and unique setup. Now, tell me guys, how many stocks you can find on a daily basis that start trading at 17 and trade $6 to the upside? How many? Over a week, how many can you find? I don't want to say enter and trade, but find even in retrospect, analyzing the daily chart of many big movers. A lot, very few, abundance, not very few. Yeah, not too many. I don't want to say very, very few. Okay? Tim says 2 or 3 per day. Okay, Tim, 2 or 3 per day. Find me one over the last week that started the trading day, not per day, per week, that started at 17 and went up $5 or $6. One, I dare you. It's not very easy. I'm talking about a $20 stock, not Tesla, which is $800. Not very easy. Okay, but this is why you are in front of the charts, in front of the charts 4 or 5 hours per day. Okay, so you got me one. Okay, but again, the idea is it's not very easy to find those trades and not very easy to trade them. All right, so the purpose of us, our purpose as day traders, to find those specific stocks. If you will focus your trading on those specific stocks, and the names and actually the symbols change every time. They change. It's not like JWH is going to trade $4 every day. It's going to do it once every 6 months. But the GWH is going to be one day, JSPR the other day, WBA the other day. So every day there is something, 1, 2, or 3 stocks that are the big movers. Now, focusing on those big movers is the right thing to do from a day trading purpose. Okay, so our mission is to find those unique big movers and trade them. As you can see, Scott posted today, I don't know, 4 or 5 trades in FUTU. Why is that? Why is FUTU was suddenly so attractive? Okay, it's not like FUTU is on our watch list every day. Something happened today in FUTU. So again, the mission is to enter the trade as early as possible, okay, and stay in the trade for as long as possible. Yeah, this is the view up on the chart, yes. But we're going to have a full session, or at least half a session, about the view up tomorrow. And the importance of the view up in day trading. So the idea here is, okay, you observe the stock, and it should be observed early. Why is it important to observe early? Because those big movers start very early, and sometimes they trade higher for 4 or 5 hours. Okay, so this is super important. Enter the trade early. Entering the trade at 11 is also fine, but entering the trade at 3 is not the right thing to do. Sometimes even a lunch trade will be fine, but the idea is to start entering the trade as early as possible and holding on to a position of that trade, hopefully until the end of the trading day. That's the mission of a day trader, not selling it very, very fast. Okay, so we're going to talk about trade management Wednesday, I think. So this is the mission. Find the chart as early as possible and find the entry point as early as possible. Okay, now the entry point is super important because the entry point is already the trade, and the trade means that you take a risk on the trade, and if the trade fails, you lose money. If the trade makes money, of course, you need to manage it and try to exploit or maximize the outcome of the trade. So if the trade started at 17 and you sold it at 18, and by the end of the trading day it closes at 22, and you think you had an amazing trade, guess what? You had a lousy trade because you sold it, again, you made $1, which is beautiful, but you left $4 on the table. $4 on the table, that's money that should have been in your pocket, and for some reason it's not. And this is going to come to bite you eventually later, because you're not going to have a $5 trade every day. I wish you can, but it's not very easy to accomplish. So let's move on. So again, going back to what is the most important parameter for day trader. First of all, it's important, like I said, to see and observe very early the huge pickup in range and volume, and then to find the technical entry points. We don't want to guess what is the entry point. We want to see a technical pattern, which is a breakout or a reversal trade. We want to analyze what is the risk on the trade. We want to trade only volume stocks that have no spreads, and so forth. Let me answer the question. So all entry points depends on the big move. No. I'm not making a rule for the entry point. The entry point can be early in the morning and then over lunch. It's not like we can control that. Okay, but the idea here is that you focus on those big movers, find the entry point as soon as possible, okay, and stay in the trade for as long as possible, okay? As long as you are making money, you stay in the trade. Now, how do you manage the trade? We're going to talk about it, I think, on Wednesday. This is part, of course, of this is why the Start Trader class is so important, because in the Start Trader class, you start to learn about and how to manage a trade, okay? to take a partial? What does it mean, and why do you take a partial? So now let's get to today's topics, or today's topic, okay? We're going to talk about momentum stocks and what are momentum stocks and why we should trade momentum stocks. And then talk about reversal trades with momentum stocks. And what is a momentum stock? Now we're coming to the definition of a momentum stock. It's a combination of volume 3 times the average and daily range at least twice the average. Okay, that's very, very important to us. So we want to trade only those stocks that have a clear advantage. And this advantage is way more volume and way more range. I mean, we don't make money out of the volume, but we can make more money, or it will be easier for us to make money if the stock develops a very big versus the average trading range. So if, for example, a Tesla is trading a trading range of $15 today, and tomorrow it's going to trade $50. It's of course easier to understand for us as day traders that when Tesla trades a $50 range, it's way more easier to make money in Tesla on a $50 range versus a $15 range. It's the same with every stock, because the range is where the day trader takes advantage of institutional traders buying. Let's define it. They are buying for the long term. They are not buying for like us for the near term. We buy at the position intraday, and most of us will close it by the end of the trading day, or at our target. The institutional trader will be in the trade sometimes for months, sometimes, if they're lucky, for decades. Ask those institutional traders that bought Booking at $25, or Amazon at $40, or Apple at, I don't know, $2, and so forth and so forth. Many institutional traders stay in positions for decades. We don't stay in positions for days. Okay, so that's a different line of business. Now, if you look again at the daily chart of most of the stocks that we trade, or you traded today, okay? So anybody that has the time, take a look at your trades today and ask yourself, how many trades did you do in stocks that have been defined as momentum stocks? Meaning they have a great trading range today versus the average, and a great pickup in trading volume. And I will have to say that today, actually, I couldn't find that many. The only one that stood out was Mara for me and FUTU at the beginning. I will check later to see if Snapchat also did something interesting, but it's clear that Mara and FUTU were in line with momentum stocks today. For whatever reason, again. So what are momentum stocks and why we should trade momentum stocks? Take a look at OSTK. OSTK started 2020 under $10. Those who remember the pre-COVID era. Overstock is an online retailer that sells furniture over the internet. Okay, so if you look at the price action, in January, dead. In February, dead. In March, dead. April, something happens. Then May, then June, and suddenly the stock moves from 20 to 120 in 3 months. So what happened? Why is the stock moving from 20 to 120 in 3 months? Obviously, something great is happening. They are selling furniture online like crazy. That was the COVID era. And you can see the ranges in overstock developed from less than $1 in January to $5, $6 in August. Now, how much money can you make trading overstock or STK in January or February, day trading it? Can you even day trade OSTK in January or February? The answer is no, you cannot day trade it because nobody does trade it. Okay, nobody cares about OSTK, it's dead. Okay, and then suddenly something happens. Okay, so now if you are an investor and you manage to buy OSTK at 20 and you sell it at 80, that's huge. But as a day trader, you don't even look at it. You don't know that the stock exists when it trades at 20. You start to see it maybe when it breaks 40 or 50. And there was a time, if you remember the guys that are veterans here, that 2 years ago, we used to trade OSTK, and now we don't trade it anymore. Now we trade other stocks. And in 2 months, we will trade other stocks. And again, I don't want to put the chart of Moderna in the room. So again, the idea here is that you want to trade those unique trading days in the stock that have the attached momentum to it. Now, this is why you look for other stocks every day. And where do you look for those stocks? Basically, you can do your own research in the pre-market, and you need to use the gainers, losers list that's on the platform, or the top 20 for those who are trading the old platform. That's basically where we get our trade ideas, and the big movers are going to come from this list, okay? Sometimes it's complicated to find them, but most of the time it's not. Why I say complicated? I will talk about WBA, I think tomorrow. Now take a look at the same overstock. Okay, August 14, it trades 5 million shares. Okay, and the average range is $6. Then August 15, it trades twice as much, and the range is $20. Okay, so again, the same stock, one day it's dead or looks like a doji, not tradable. A day after, gap up and go, and the stock goes from 100 to 120. Now, during this move, the $20 move to the upside, the job of a day trader is to find the entry point. Sometimes it's not very easy to find the entry point. Sometimes the stock is going to move very fast, okay? Sometimes it's relatively easy to find the entry point. You know what? It's never easy, but it's tradable. So let's go back to the daily chart. What are momentum stocks? Okay, momentum stocks are those stocks that do show on the daily chart, and I have to stretch it. You will see the momentum stocks only on the daily chart, not on the intraday chart. You will see those on the daily chart. So you need, before you take any trade, to look at the daily chart and understand what type of a stock you are trading. Okay, is this a great trading day for the stock, lousy trading day, average trading day? And then you make your decision. I suggest you focus on momentum stocks. And you'll see the difference very, very easy. And you should see the difference very, very early. Okay? When I say early in the day, it means by 10:30 you should already see that the stock is developing more volume already after an hour of trading that it did on the previous day after 6.5 hours of trading. That's actually the signal that something is happening, even if you don't know what's happening. So now you can see OSTK on September 10th. Nothing is going on. Okay, nothing is going on intraday. And on the day after, take a look. The stock dives from 80 to 64. So that's the difference between a great trading day and a lousy trading day. There's a difference between your ability or our ability to make money versus our ability or our inability to make money. For those who traded last year, remember Eno during the COVID crisis? That was the stock that at one point was following Moderna and Novavax. Take a look. The stock trades sideways for months, then moves higher and faster lower, and then another three months on almost no volume, and then something happens. The stock gaps up and goes from 15 to 30 in 4 days. During those 4 days or 3.5 days, okay, your mission is our mission as day traders to make money in Eno. So the time frame to make money in Eno is very sporadic, okay? But we have Eno one day, OSTK on the other day, WBA on Wednesday, FUTU on Monday, and I don't remember what was Friday, and Alcoa on Friday. So there's always one stock, two stocks, sometimes 5 stocks that apply where you can apply this strategy and take advantage of. Now let's see some examples, and things will be clearer. After you see the examples, things will be clearer. So for those who are joining us in the class for the first time, we go from 4:05 until 5:30, then we take a break for 5 minutes, and then continue until 6:30, 6:45, okay? Now, if you remember, Meir talked about gap up and go in the start of the class. This is crucial in momentum stocks. However, we can trade momentum stocks also if there is a gap down and the stock is moving up, and the gap up when the stock is moving down. So for us, it's not really crucial that it must be a gap up and go. We can take advantage of a gap up and a sell-off, or gap down and then a buyout in the stock, or a strong buy signal in the stock. Also, we don't need to take necessarily stocks or buy necessarily stocks that have great daily charts. We can buy anything, okay? Even a lousy daily chart is buyable. For example, FUTU today. So if you look at the chart of the daily on FUTU, you see that it's almost at the lows of the year. Not quite clearly, but it's after 70% pullback from the highs of the year, or maybe more. Let's say it's only 70, okay? So why would we buy FUTU today? No reason other than it is a momentum stock. And will it continue to be a momentum stock tomorrow? Highly unlikely, but sometimes it happens that we get the second day up. We'll see tomorrow. Anyway, let's take a look at this example, okay? That's US Steel, okay? The stock is actually moving lower. You can see it on the bottom chart. So now let me describe what you see here. You see the SPY intraday, and the day is May 3rd, 2019. You see the 2-minute chart of X on that particular day, and you can see the daily chart of X. So now if you look at the daily chart, this is where you analyze if it is a momentum stock or not. Now, is X a momentum stock on May 3rd, 2019? Where do you look? On the daily chart. Now, is it a momentum stock? You decide, guys, yes or no, based on the assumption that we said earlier, volume 3 times the average, trading range 2 times the average, or something that varies very aggressively versus the average. And again, if you look at X, you see that this is the best volume bar going back 3 months. So V on volume. Now range. Is the range the best over the last 3 months, which is 60 days? So this is the best trading range in 60 days. Now, can you observe it very early? Sometimes yes, sometimes no. If you don't observe it early, tough luck, you know. But you do observe it early, you can take advantage. If you observe it by 4 p.m. or the day after, it's not going to help you much. So the idea here is that you need to observe the pickup in volume, which is very easy to see relatively early, and the pickup in the trading range. How? Just look at the daily chart. You'll see very early that the volume in X at 10:30 in the morning is higher than the volume over the last three weeks or 5 weeks. Also, the stock is probably going to be on the top 20 or gainers list. Also, you'll see that it has a great uptrend. So it's, again, you'll need to, nobody's going to send you an email, please, Sholev, please trade X, blah, blah, blah. It's not going to happen. Maybe we can find it in the trading room and you can take advantage with the rest of the room. But let's say you're not in the trading room, although I suggest you should, but you are alone in your home, trading alone. Nobody's going to send you an email or a WhatsApp begging you to buy X. You need to work for that. Okay, so if you observe that it's in the gainers list, and you observe the big pickup in volume, and you observe the increased range early on, now you go to the intraday chart and look for a trade. Clear? Again, it doesn't require a lot of instruments. It's very simple, actually. It's either you see the pickup in volume or you not. It's either that you see the pickup in range or you not. It's either that you see an entry point or you don't. Okay, so it's no, don't. Okay, if you don't see the entry point, okay, so you're not going to trade it. If you see the entry point, you can trade it. But you know why you should trade it? Because it has unique features like institutional traders are buying, because guess what? Those are the guys that are moving US steel from, I don't know, 15 to almost 17 in a trading day. 15 to 17 is 10%. It's $2, more than 10% to the upside. So a $10 move is a big move, okay? Per 1 day, it doesn't happen very often that the stock is moving $10, okay? So nobody, expects a day trader to buy it at 15 and exit at 17. But if you can buy it at 16.50 and exit at 16.60, that's not the idea. If you buy it at 16 and exit at 17 or 16.80, that's a good trade. So again, we're not looking for a 10-cent move. We're looking for a 50-cent move or $1 out of $2. Okay, but we're not looking for a normal move here. Again, only because it's a momentum stock. Now take a look at BIG. 2 trading days, 2 distinct trading days, okay? Take a look at the volume on December 6th, 2019. Hold on a second, let me fix this. Okay. And take a look at the volume on February 28, 2020. Basically, what's the difference between the volume on those particular trading days versus previous? If you look back at the volume on the stock 3 months prior, almost you don't see any volume. So it's clear that something is happening for big lots on that particular day, i.e. December 6th. The volume is up 1,000%. 1,000%, it means 10 times more volume versus average. So if the average is 1 million, it will trade on that particular day 10 million. How many? Yeah, it traded, I think, 10 million shares on that particular day, although I don't remember, okay? So again, you can see the stock is basically trading good volume for 3 days out of the 1, 2, 3, 4, 5, 6 months. You can see here 6 months of price action in big lots. Out of the 6 months, which are, let's say, 120 days, trading days, there are 3 that are really, really outstanding in terms of trading volumes. That's it, it's not happening very often. The big advantage of trading the US market is that you have so many stocks, so many opportunities, and if you can't find a big lot, one day you will find another trade. Okay, so I'm sure that tomorrow, now that we are we're not already deep into the earnings season, but we are getting into the earnings season like in a week. In a week, we're going to have dozens of stocks reporting every day. There will be plenty, I don't want to say 10 per day or 5 per day or 20 per day, momentum stocks available to trade. Those are the trades that you should look for. You want to make money? Go to the momentum stocks. And if not, you can make money on many other trades, okay? But it will be easier and probably more profitable to trade those big movers. Again, why Scott moved and traded 4 times today FUTU? Just take a look, guys, at the daily of FUTU, the pickup in volume today and the pickup in trading range today. And I think that will tell you the story. Again, now you're going to see them, you're observing the intraday chart of Biogen. Okay, so BIAB is the symbol. Now you can see almost every 3 months, there's one good trading day. Why is that? Earnings. So the stock is gapping up, huge volume, gapping up, amazing volume, and then in between, what's going on in between? Nothing. Well, nothing for us in terms of day trading. Maybe for investors, amazing things are happening, although if you are an investor, you know that nothing is happening also as an investor. So if you put money to work in Biogen, sometimes it will move, you will move with it sideways for months without getting anything done. And if you are a day trader, all you need is 3 hours to make, I don't know, 5 or 10% on your money, and then you exit, and basically that's it. And you make more money versus the investor. Again, it's our job is not to compete with investors. Okay, our job is to take money from the market on a daily basis using those big movers where it's easier. Yeah, there was some news, of course. It's easier to trade those big movers. Guys, you remember, I don't know, 2 weeks ago, AFRM was a 20-cent mover intraday. Okay? That was in the room traded 2 weeks ago. Again, it's not happening every day. Sorry about that. Now, SPC, another stock that IPO'd in 2019, moved sideways for months, and then suddenly erupted. Why did it erupt? Who cares? Obviously, good news, good earnings, good maybe an upgrade, maybe, I don't know. The idea here is that the stock is moving sideways for months, nobody cares, and nobody knows that the stock exists. And then suddenly, very, very fast, there's a pickup in volume, and 2 weeks later, the volume dies and nobody remembers SPC anymore. Those are not speculants, those are institutional traders, okay? Some of the traders are speculants, but who cares? I don't know if the speculants are speculants, or maybe we are the speculants, okay? But the bottom line is you either make money or you don't make money. It's easier to make money when the stock is moving up on 50 million shares versus when it's moving up on 1 million shares. It's easy when it's moving up on and trading a $10 range versus a 50-cent range. If you look at SPC in December, it trades less than $1. And 3 months later, it trades almost $15. So $1 in December, the daily range, and the daily range is 15 times bigger 2 months later. And in May, it comes down to maybe $1 again. And so in between, we need to take care of business and trade SPC. That's the bottom line of momentum stocks, or in momentum stocks. Okay, now you finally see the chart of Tesla, guys. And now you can see clearly how Tesla traded on February 3rd, that's the 2020, okay? Huge pickup in the daily range and huge pickup in volume, and it doesn't matter if the price is 800 or 200, okay? The idea here is that if you look at the daily chart, okay, in September, October, November, December, and January, nothing changes. Suddenly in February, the stock gaps up and develops a trading range of 10 times, maybe 20 times of what it used to do in December. So why is it happening? Obviously, Tesla is selling the Model 3 and Model 3. I don't remember the small one and the big one, the Model Y. Anyway, they're selling like crazy. Okay, so the outlook is amazing. The company is finally printing dollars instead of being on a verge of bankruptcy. Okay, so all those traders that were short are getting killed. And investors that are looking for the long term are seeing maybe a new Apple here. And the stock is trading 20 times the average volume and 20 times the average range. And now this is your job as a day trader to take advantage. Maybe Tesla is not the easiest trade around, but there are plenty of others. And again, this is the concept, okay? So let's summarize. What are momentum stocks? A priority for us, because those are powerful intraday moves. So momentum stocks should be a priority. Why? Because those are powerful intraday moves. This is what the day trader is looking for. Momentum stocks are easy to spot. Okay, this is something that's very easy to spot, or relatively easy to spot. You don't need to go through various procedures. Those momentum stocks are easy. It's either a momentum stock or not. It's not. You're not required to look for 1% over the average volume. You need to see 300% more. So it's either 300% more, or it's not. So if you see a clear pickup in volume, it's a momentum stock. If you can see a clear pickup in the daily range, it's a momentum stock. If you see one or the other, okay, it doesn't mean that you're not going to trade it, okay? But it's not a momentum stock. It can still be a great trade. Most likely, it won't be a great trade. It's going to be a good trade. But in order to have a great trade, you'll need to have increased trading ranges and increased volumes that will make the stock move, or most likely to move more, because there are more buyers coming in. Now we're going to talk about trading momentum stocks using two, again, simple strategies: reversal and breakout/breakdown. And we'll see some examples in a bit. Now let's take a look at this example from, again, a stock that we don't trade, MAN. When was the last time that anybody here in this room traded manpower? Did you ever? Anybody here in the room traded manpower? I don't remember when I traded it. I think I traded it once in 15 years. Okay? And for a good reason. Who cares about manpower? Again, if you looked at manpower on April 18, this is pretty much the only day where you can make money in manpower. Why? Breakout on the daily chart. You can see the stock moves over 90 in the morning session, basically ends up at 97. How many times you can trade manpower from 90 to 97? I think if you put today, okay, the daily chart going back 3 years to 2019, this is the best trading day ever by far for manpower. I don't think even once every 3 years. Again, why would we care about manpower? Nobody cares, and I don't care about manpower. I don't know why it's moving higher. Obviously, it's earnings, okay? That's clear. I know that it is earnings because I can, find it very easy on the earnings list. But the symbol is not important. What's important is to observe the huge pickup in volume, and it doesn't necessarily need to be a lot of volume. So if the stock trades on a normal day 500,000 shares, and on the momentum day 1.5 million shares, that's enough, okay? So if the stock trades a range of $1 and suddenly the range jumps to 5 or 6 or 7, that's okay also. Now, most of the stocks that trade low volumes also have spreads. So now the question becomes, do you want to trade spready stocks? And the answer is never, okay? But if you have a great technical pattern, maybe it's worth risking, instead of buying, I don't know, 400 shares, buying only 200 shares and still getting a $4 move. So again, the idea here is that you take advantage of what the market is giving you on that particular trading day, okay? And then the day after, nobody remembers. As a day trader, you won't remember what you traded, okay? All you remember is made money, lost money, or you will remember a great trade. A great trade, which is a $3 or $4 trade, will stick. So that's where the big movers are going to come in for you guys, for us, basically. And again, it doesn't need to be a stock that, like Tesla, it doesn't necessarily need to be AMD. I wish it will be AMD. Today it was FUTU. Okay, today it was FUTU. Friday it was AA. Thursday it was, I think, WBA. Wednesday it was, I don't know, maybe UPST or whatever. Okay, so there's always something or some stock that's moving a lot. And during earnings season, which is exactly starting now, they will have a lot of stocks to choose from. And the big movers are going to come from the stocks that are reporting earnings most of the time. It's not too late. You're not right. because the trend is higher all day. Take a look. MAN is starting the trading day at 90 and closes at 97. It doesn't go straight in the first minute from 90 to 97. It goes from 90 to 93 to 94 to 95 to 98 or 97. Okay, so FUTU today, it didn't go straight up. The stocks go through pullbacks. So there are plenty of opportunities to enter those stocks. Now, if the stock is moving up, yeah, the bottom right is the daily chart. No, the top chart is the intraday chart. This bottom right is the daily chart of MAN, and the SPY is on the intraday chart. Now, again, the idea here is to try and buy it as early as possible, okay? But even a lunch trade will be good. Even a lunch trade will be good, assuming, the right risk reward. And again, on the day after, being that most of us will close the trade by the end of the trading day, on the day after, nobody's going to go and trade MAN, okay? Maybe if it is AMD, you're going to repeat it. I will go and attempt to trade FUTU tomorrow as well, but most likely the chances of making money tomorrow in FUTU are going to be way slimmer, I think, versus today. Now take a look at this example again, 3M. 3M is also reporting earnings this week. Anytime 3M reports earnings, it's a very good trading day for 3M. When the stock is not reporting earnings, who cares about it? Okay, so again, the idea here is to find the earnings day and hope that it's going to develop into a good moving stock. Most of the time, it is on earnings. Most of the time, that's 3M. When was it? In February 2 years ago, a year and a half ago. Okay, as you can see, gap down and go, pick up in volume. Okay, versus take a look at the volume on the gap down and go versus previous 3 to 6 months. It's clear that something is going on when the stock is going to a big gap down and go. Now, this is the trading day, okay, that you want to trade, okay? Meaning you need to look for clarity. If there is no clarity in the trend, okay, so you don't trade it. For example, today we had, I think, MDT gapping down. But the stock gap down, moved up, down, up, sideways. It was totally unclear. Okay, what was the trend? If you look at 3M, going back to February 28, it's clear that the stock is making its move lower, pulling back, down again, up and down. The trend is lower until almost 4 p.m. Okay, so this is what you want to see. You want to see a clear downtrend or a clear uptrend. If the stock is moving up, down, and changes direction by 12 noon already 5 or 6 times, even if it is a momentum stock, you won't be able to trade it. No, you don't need to see the earnings report. No. Nobody cares. You will understand, won't understand it, and it's meaningless. You don't need to see the report. You need to see the chart, because if you see the report, you won't have time to see the chart. Okay, by the time you read the report, the chart is, the trading day is going to be over. So the idea here is forget about the report. Let the institutional traders learn the report. They have accountants for that, and that's their expertise. You trade the chart. Okay, so take advantage of the chart. Let those guys figure out if they want to buy or sell. If they want to sell, it means they're not happy. or most of them are not happy on February 28. Maybe on February 29, others will change their mind, okay? But our bottom line is to trade February 28, okay? Good. Again, so it's very important to look for clarity. If it's not clear, you look for another trade. Don't force anything. Sometimes we force trades. And the idea here is that you force trades, most likely you will lose money. So if the chart is not giving it to you, okay, why force it? Because even when the chart is clear, things can go wrong. But if the chart is not clear, what are the chances that a trade will go wrong? Way higher. So again, even if it is a momentum stock, but the chart is not clear in terms of your entry point, don't bother. Now, there are those stocks, okay, like this example, where the volume is less than 500,000 shares. If the volume is less than 500,000 shares, even if it is a momentum stock, I suggest you don't trade it. Okay? So we just said that we like to trade the momentum stocks, but we have our limits. And our limits are very low volume, we don't like to trade. On top of that, most of the low volume stocks will come with spreads. So volume and spreads, not good for day traders. Okay, guys? So stay away from those type of stocks. Yeah, exactly, yeah. So, for example, let's say that Johnson & Johnson is reporting earnings. Two options. It's either before the market opens, and then it will trade the earnings report immediately, or it reported the previous evening. Okay, so the stocks that are reporting earnings tonight and the stocks that are reporting earnings tomorrow morning are going to the earnings day tomorrow. That's the idea. I think Johnson & Johnson is reporting tomorrow morning, and we will trade probably or Wednesday morning, and we will trade it accordingly. Okay, so that's the big deal. And sometimes the stock will trade a normal trading day on earnings, and suddenly it will start moving the day after. It happens from time to time. Rarely, but it does happen. Again, the idea is that we need to take advantage of those stocks that have the big move. Again, most of the time it's going to be on the earnings day. Most of the time, not necessarily. For example, today FUTU did not have any earnings. Okay, it still moved up 12 or 15% from the lows, which hardly ever happens in FUTU. So going back to this chart, momentum is only a signal. Okay, momentum is not an entry point. When you look for the entry point, then you have a tougher job, because the signal is just telling you, okay, fine, look at HRI, but then you see volume less than 500,000 shares, spreads, I don't know, let's say 20 cents on a $40 stock. Most of the time it should tell you, okay, unless you see an amazing pattern, do not trade it. We normally don't ever trade stocks that trade below 1 million shares. Okay? It's not necessary because we have so many alternatives. Now, if you trade the European markets, 1 million shares, it's a lot, okay? But this is why we prefer to trade the US market, because 1 million shares is something that AMD trades in 5 minutes. On earnings in 1 minute. Okay, so again, volume is not the most important thing. But it's really important to us to trade stocks that have bigger than average volumes, bigger than average trading ranges, and spreads that are relatively tight. Sorry. Okay, and sometimes, as you can see, we won't be able to take a trade. We won't be able to take a trade in a stock for months. This is an example of BYND. Okay, we won't be able to trade BYND for months. Okay, and sometimes there's a huge gap down, and you can see the example here. Big gap down, but the volume is not necessarily bigger, and the trading range is looks like a doji. Guess what? If you look at the doji and you look at the intraday price action, you'll see it was very tough to make money in BYND on February 28, despite a huge gap down. So a huge gap down is not necessarily, or a huge gap up, it's not necessarily enough. You need also to figure out the intraday price action. And if you observe the daily chart, you see immediately, is it a doji? And do you see the pickup in volume? And it's obviously clear that it's a doji, and there is no pickup in volume in the stock. This is something that you will see very, very early. Guys, let's take, now it's 5:21. Let's take a 6-minute break. Is it okay for everybody? A 6-minute break, and come back for the second part of the presentation. If anybody has a question at this point, write it down and I will answer it when I come back. So let's take 6, okay? Okay, guys, not 5:37, 5:27, okay? In 6 minutes. Okay, guys, let's go with team. It will take some time to prepare coffee and stuff. Let's come back in 8 minutes at 5:30. Okay, so let's round things up. Thanks, team. So 5:30 is fine with everybody, I'm sure. Yeah, Ryan, have a great afternoon or good night. And please request the recording from Clifton tomorrow morning. Guys, anybody that needs to bail out for whatever reason, it's late or whatever, you have the recording of this session and basically all the sessions available. Just email Clifton for that. Okay, guys, I'm back. If anybody has a question regarding the presentation so far, that's the time. If not, I will continue. You have Clifton's email. Anybody here must write down and learn this this email. No question, guys? Can I continue? Okay, good. Okay, so again, we said no clarity, no trade. No momentum, no trade. Even if it looks like a potential a big mover. Okay, so let's see another example. Take a look at this example from Roku. That's a long time ago when Roku was 150 bucks. Now it's 300, it was 400. Anyway, you can see the best trading day in Roku, but what happened here? The stock gaps up on earnings. I remember it because we traded that particular trading day. Okay, so the stock gaps up on earnings and then sells off. You can see the price action on the bottom chart. The stock sells off from as high as almost 150 to as low as 130, the whole trading day. Is this a momentum day for Roku? Yes, it is. Okay, yes, it is. Is it trending lower all day despite the gap up? Yes. So it's not a gap up and go. Okay, it's a gap up and then it sells off aggressively. We've seen many times this event happening. Okay, many times, and we will see in the near future also gap downs that close and the stock is moving aggressively higher, like WBA 3 or 4 days ago. Okay, so keep in mind, this is still a momentum day and it's still a tradable stock. Okay, maybe not as easy as a gap up and go or a gap down and go, but it's a little bit more confusing, but anybody that traded the Roku on that particular day short, especially using the VWAP, and we're going to discuss the VWAP trades later, I think tomorrow, later in the class, I mean, and took advantage of this move, got, a week worth of work in 1 day in Roku. A week worth of work taking advantage of this amazing sell-off day. Again, why was it a sell-off day? I don't know. Obviously, the gap up was used as an excuse for some institutional investors to take profits aggressively off the table. That's what they did. Was it a smart move? I don't know. Probably not, but they took advantage of the gap up and sold. Okay? Maybe short traders join them. I don't know. The bottom line is, can we take advantage of Roku? The answer is yes. Even 50 shares short a 140 was a $10 mover. That's you can make on a $10 mover. 50 shares adds up to a lot of money. Now let's see a couple of more examples and then move on. Okay, most of the time we would love to trade the gap down and go. Okay, this is an example of a gap down and go in GPC, a stock again that we never trade. Nobody trades it unless earnings are happening. The stock is selling off now from 110 to down to 105. As you can see, clearly the best trading range for the stock in months. Also the best volume, not the best in months, but over the average. What's important here that if you can observe the movement in terms of the trading range and you find an entry point, that's your trade. That's basically all you need, okay? Very, very simple observation in terms of go ahead and look at GPC. Now, how can you find GPC? Most of the time, it's going to be on the gainers, losers, / top 20 list. Most of the time, okay? Those big movers are going to be on the gappers, uppers or downers. It's possible also that they won't appear. So if they won't appear and you're not prepared to watch them, being you don't have a list of stocks that are reporting earnings, you're going to miss it. It can happen. I mean, we do miss trades left and right for various reasons. Now, again, the example here in CGC, okay, those who traded CGC in the past remember it, is that the stock is gapping up, looks to be a gap upper, and basically sells off over lunch and closes at the lows of the trading day. Again, looks great on the intraday chart for long, but basically turns lower. This is more complicated to trade, okay? More complicated to trade versus a gap up and go where you know exactly what you're doing because the trend is higher. Here, you don't have the uptrend, okay? If you pick up the right entry, you can make the move or enjoy the move here. The idea here is that it's easy to follow on those big movers. Why? Because they are giving you clear signals. At least you have a clear. If you don't have a clear entry point, you have a clear signal, which is part of the job, not the biggest part, but part of it. Now take a look at this. In this case, those who traded Boeing a couple of years ago, and remember it as a $400 stock and the most important Dow component. Okay, so the stock is a big mover, trades at $400, but on a given day, it's not a good mover. Why? No volume, no ranges, no trends. You don't force a trade on a stock just because it's a big mover. It's exactly why many traders trade today Tesla or Moderna. It's a very big mover, okay? But there are particular days when it's right to trade it, and there are particular days where you shouldn't trade it. Now, the difference will be and should be the momentum stock or the perfect intraday pattern. Okay, so a $400 stock or a $500 stock, it's not necessarily your preferred day trading stock. That's the bottom line. And on the other hand, here we have an example where the stock gaps down and then trades aggressively to the upside. That's Skechers, again, 2 years ago. And we've seen that this event happening many, many times. The stock gaps down and then trades up very aggressively. But you can see immediately, very, very fast, that the volume picks up aggressively. You can see that the trading range is bigger than average. And now your job is to find an entry very, very fast in Skechers, despite being a gap down and a long trade after the gap down. Again, for day trading purposes, we have no problem buying a gap down or shorting a gap up, okay? As long as we have the signal for it. And the signal for it is the momentum signal. Let's summarize, guys, momentum stocks and then move on. So momentum stocks need to create a big uptick in volume, preferably 1,000%. But even 100% is fine, okay? As long as it's something that's clearly noticeable for you or for me or for anybody, okay? We need to see a difference or a very, very distinct difference in volumes and trading ranges. All other trading, day trading parameters must be checked as positive. So it's not enough that the stock is a momentum stock. We do still need to see that it has no spreads, a clear trend. The risk reward is positive. We have a technical pattern. We have volume when we buy. We have the timing, the sector match, and very important, market support. We should try it as much as possible to trade with market support. Okay? If the SPY is not doing anything, fine. But if the SPY is working counter your trade, most of the time you shouldn't take the trade. Okay, so trading counter the SPY will make even momentum stocks fail eventually. Okay, so you need to trade the momentum stocks short if the SPY is moving lower, and otherwise if they're moving higher. If the SPY is not doing anything, fine, go for both. Okay, but don't trade counter the trend of the SPY, even if you have a momentum stock. Most of the time, it's not going to be enough. Now, let's again talk about a couple of what are the reasons behind the big day in an individual stock. Most of the time, I will have to say 80%, maybe 90% of the time, it's going to be a better or worse than expected earnings report. That's the reason, most of the time. Other reasons, news related to the launch of a new product or service. Sometimes it's can be also, let's call it this way, how would I call a verdict in court? A dispute that's being decided in favor of one of the parties. We've seen it happening from time to time. Then we have regulatory news and upgrades and downgrades. That happens also. Again, not very often that we see a big move on an upgrade or a downgrade or some regulatory news. And also, we don't see them that often anymore, but we used to see it in the past, and it may come back a recognizable breakout pattern in a market leader, like Apple breaking, I don't know, 150, NVIDIA breaking 200, Tesla breaking 800. You know, those big round numbers can create also momentum in the stocks because traders from all time frames, including short traders, are joining in, so that can create from time to time a storm in the stock. But like I said, most likely it's not. Most likely it will be earnings, okay? Because on earnings, this is where institutional traders make the decision to stay or bail out and move to another stock. So if an institutional trader has 100,000 shares of Tesla or 1 million shares of Tesla, and he wants to get out, the earnings day is the right time where he will get out because that's the purpose, you know. No, they don't do it in the pre-market. Or as much as I know, they don't do it in the pre-market because if you are an institutional trader and you want to get rid of a lot of shares, you want to do it without people noticing it. Okay, so the pre-market volume, the whole pre-market volume, like 2 hours, is less than the volume of the first 5-minute bar. So why would they risk moving the market and creating harm to themselves? Because they throw a lot of shares into the market in the pre-market, the stock dumps, and their purpose is to sell as high as possible, you know, if they want to get rid of NVIDIA, okay? And they will start uploading shares in the pre-market. The stock is going to move very fast lower in the pre-market, and then what's the purpose for them? They want to do the opposite, okay? Sometimes they will buy in the pre-market to pick up volume or a little bit of volume and a lot of range okay, to the upside and then start selling. One of the reasons that I'm not sure, that many gap ups are being sold is this feature where an institutional trader can buy, let's say, he has 1 million shares to sell. He buys 10,000 in the pre-market, drives the price higher in the pre-market, and then instead of selling at 90, he sells at 93. And starts unloading shares at 93 versus 90. Again, I don't know how they do it, if they do it. I don't want to blame anybody for manipulating the pre-market. But again, the pre-market is super easy to manipulate because it trades low volumes. There are traders, most of the traders I think in the pre-market are Chinese traders. I have no proof for that though. That's my assumption because those guys go to sleep immediately after. I mean, it's very late in China. And most of the trading in the pre-market is in Chinese stocks. Maybe because it's they dual trade also with Singapore. But again, I don't know who's trading the pre-market. I suggest nobody here that we know trade the pre-market. The pre-market is the toughest trading environment possible. Absolutely no volumes. You cannot use the stop losses. You cannot use stop orders. You cannot use market orders. You can use only limit orders. That's something that you should stay away. You have 6.5 trading hours. Okay, now you're thinking, okay, that's not enough. I want to trade the pre-market and maybe the aftermarket. Doesn't make any sense. Okay, so the chances of making money in the pre-market are very, very slim. Very, very slim. And it's a tough environment. Okay, so let's move on. Now, how do we act on momentum stocks? Intraday scanners will pick up the majority of momentum stocks and list them. That's, of course, the TFS Top 20 / gainers losers list, individual lists, gappers in the pre-market list. Most of the time, it's going to be very easy to pick up the signal. So the signal is not the toughest thing here. The signal is 5% of the job. The real job is to find the right entry point with the right risk reward. Now, what I suggest you should do, guys, create a very small watch list on the platform, either TFS or Revolution, dedicated to momentum stocks. Add to this list 3 to 6 symbols only. Okay? That's what you should do, okay, in the early stages of the trading day, either in the pre-market or already after 30 minutes to an hour. Depends where you start. Okay, so if you see a big move in the pre-market in the stock, add it to your list. Don't have a lot of stocks on that list because it will be tough to manage the list. Okay, so the idea here is to have 3 to 6 candidates and focus on those early for entry points, especially on those that are a gap up and go or a gap down and go or have great volumes and great trading ranges early on. Okay, so the idea here is to keep a very, very small list. Also, don't add stocks that are, spready, trade very low volumes, blah, blah, blah. Okay, so if the stock is a $20 stock and the volume is 50,000 shares and the spread is 25 cents, let others trade those stocks, okay? And why is it trading 50,000 shares or 100,000 shares? Because again, nobody's trading it. Nobody's trading it, meaning there are no institutional traders. If there are no institutional traders, the stock is not going to move, or most likely is not going to move. Okay, so stay away from those. There are plenty of others that fit the very, very simple criteria. No, I mean, the pre-open range is never important, okay? Because it comes with very little volume. I mean the range in the first 30 minutes or an hour. After 30 minutes or an hour, you can already observe that on momentum stocks that the range is going to be bigger and the volume is going to be bigger versus the previous week average or month average. Okay, so it will be easier, very easy relatively to observe early on the day if it is a momentum stock or not. Okay, so on momentum stocks, after an hour, the volume should already be higher than the previous day, meaning 6.5 hours Friday, and now an hour Monday, you have more volume today. Okay, that's already good in terms of trading criteria. Then you look at the daily range, okay? A gap down better? No, not in this market team. Maybe there will be a time when the gap downs are better trades than gap ups. I still think that gap ups are better trades. This is a very strong market overall. Very, very strong. Keep in mind that interest rates are at zero since COVID. While interest rates are going to stay at zero and the overall environment is pro stocks, there are many, many investors taking advantage of the gap downs to buy cheap. So I still myself, still focus on long trades, not on short trades. I wish I can find a short trade. Today I had 2 short trades, lost money on both. I mean, it was, I don't want to say nearly impossible to make money short, but it was impossible. I could not get anything going to the downside today. Maybe tomorrow it's going to be different. And keep those stocks, guys, on the list for at least another day. Why? Because there is the first day and maybe the second day. Now, most of the stocks are not going to have the second day, but sometimes they do, and it's shameful if not to take advantage. So for tomorrow, I will keep FUTU on my watch list and look for a second day up, maybe an early move in FUTU. Now, being that FUTU is a Chinese stock and trades already in the pre-market, and I think it also trades in Singapore, I'm not sure. So there's going to be a gap tomorrow in FUTU. We'll see. Again, it's a stock that trades in the pre-market and most likely trades, I think, in some other places in China, not in China, in the Far East, maybe in Singapore or Hong Kong, I don't know. Okay. Now let's summarize the benefits of trading momentum stocks. Guys, if anybody has a question, please stop. You can stop me at any time and ask. Trading momentum stocks is a unique opportunity. Remember that. For day traders to take advantage of bigger than average moves. Okay? And this is why, because we don't need to alter our trading strategies for that. We don't do anything other than observe that it is a momentum stock. And then now comes the risk reward, okay? The risk reward ratio when trading momentum stocks can be a game changer, okay? And it will be a game changer, okay? If you focus on momentum stocks this earnings season, I guarantee that those momentum stocks are going to be game changer for us, okay? We need to trade those, okay? Because on momentum stocks, 5 to 10 to 1 intraday move is something that it is always on the table for momentum stocks. It never happens on other stocks. Other stocks, if you get 2 to 1, you are, wow, amazingly lucky. On momentum stocks, you can get 5 to 1, you can get 8 to 1. If you're lucky, maybe 10 to 1. Okay, this is not what I wanted to see. Let me move on. Okay, that's what I wanted to talk about is the second day up. For example, you can see here in this example, Qualcomm, momentum day, and then second day, another gap up. This is why I say, try to keep up as, as much as possible, those stocks that are closing at the highs of the trading day, even if you don't swing them, maybe there's more trading on the day after. Okay, so you can see gap momentum in Qualcomm, the stock closes at the highs of the day, gaps up and continues on the day after. And this is the case also for THC, in this case to the downside. Okay, so it happens from time to time. I will say 20% to 25% of the stocks will do the gap up and go the second day. Okay, and the gap down and go the second day. But that's not 100% of the stock. That's 25% of them. Okay, the other 75 will do weird stuff. Okay, including gapping down after a big move and gapping up after a very weak move. So that's why it's risky to hold on to swing positions, especially if you are a beginner in trading. Then I suggest you don't do it. And again, the reasons can be also, in this case, the example is on DVA, a great move lower on a stock that has bad rumors associated with the sector. In that case, it was the healthcare sector. So sometimes the whole sector is going to be a momentum sector. For example, if you remember 2 weeks ago or 3 weeks ago, both Philip Morris and Altria gapped down and moved sharply higher on news that the US, I don't know which one, FDA or any tobacco, the SEC, okay, the authority that's regulating tobacco products said that they won't allow some type of products to be distributed by Philip Morris or Altria for whatever reason, health reasons or whatever reason. So sometimes the move is going to be across the sector on some regulatory news. It happens from time to time in cannabis stocks also. It can happen. But again, our focus is on individual stocks. Now, guys, let's use this last part of this presentation today to talk about trading momentum stock reversal patterns. Those should be our preferred trades, not breakout patterns. We're going to talk about breakout patterns tomorrow, but momentum stocks, reversal patterns, those are our favorite trades. For example, most of the trades that Scott posted today in FUTU, reversals. None was a breakout trade. So for those who are hearing about reversal trades the first time, of course you didn't take the start of the class, but what is a reversal trade? The ability to buy a strong stock cheap, meaning not at the highs of the day, after a pullback, and using a technical entry point. Most of reversal trades take place after the first hour. So in the first hour, no reversal trades. But after the initial move higher and the pullback, that's when we need to look for a reversal trade. Some in the afternoon and some over lunch. Now, the reversal trade can turn into a big winner. The idea here is it can turn, it doesn't have to turn. But this is a must. When unsuccessful, the reversal trade should be always a small loser. You cannot have a big loser in a reversal trade. If it's a big loser, it's not a reversal trade. By definition, a reversal trade is a low-risk trade. Okay, so what is a low-risk trade? 0.5% risk. So if you normally risk 1% on a trade, let's say on a $50 stock, you risk 50 cents. On a reversal trade, you need to risk half of that. Okay, because the setup is never going to be a perfect setup. Okay, and it must be that being that you have the potential to trade many reversal trades, you cannot lose a lot. Okay, you need to lose very little and try to take advantage of the big movers. So The risk reward on a reversal trade should be 3-to-1, not 1-to-1 on momentum stocks. It will be probably 1-to-1 on other stocks, but it should be 3-to-1 up to 5-to-1, maybe more on momentum stocks. We'll see examples, guys, in a minute. For example, this one. Take a look at AD&T. That's it doesn't matter if it is today or 3 months ago or 6 months ago. Okay. Now, what is a reversal trade? Okay, in this case, you can see that the reversal trade has 2 support lines. Okay, 2 support lines. In this case, you buy over the support line. Okay, you buy in the morning session over the blue line, and you buy over the lunch session over the blue line. This is taking advantage of support. Remember, we tried over lunch to buy All